Alright, on this video, we are going to go over Collier Creek Holdings, ticker symbol CCH, which is going to be Utz. And just a quick teaser to get your attention, Utz is a company that's been around 100 years. They have over 40 years of consecutive growth. It's going to have a dividend. And what? Warren Buffett loves this company. He actually tried to acquire this company back in the day, and there's a possibility that he might be an investor once this company goes public. So to find out all of that and more, definitely watch this video. So with all that being said, let's go. What is up, and welcome back to the We Are Investing channel, a channel that is dedicated in investing and personal finance. Now on today's video, like I said, we are going to be doing a stock update on Utz. This is a stock update because I did a video on this company not too long ago, and if you want to learn more about the company overall, a in-depth analysis, definitely check out that video. I will be throwing a link down in the video description. Now, if you are new to this channel, welcome aboard. We do things a little bit differently on this channel. We like to combine the finer things in life, beer and stocks. So if either of those things interest you, definitely consider hitting that subscribe button, ringing that bell, and smashing that like button. It goes a long way in helping this channel grow, and I really do appreciate it. Now, today's beer is the same beer as my prior video because I am doing a double header today down in the basement. So I'm still sipping on this Lord Hobo Life. This is a session IPA at 4.5%, brewed in New England, and it's quite tasty. So cheers, my friends. And now that I wet my whistle, we can get on to the tipsy topics. Now, topic number one, we are going to talk about Jim Cramer and mad money. Tipsy topic number two, we're going to talk about Q2 earnings, and then we'll talk about that shareholder meeting, when it's going to be, and what could come from it. Tipsy topic number three, we're going to talk about smart money, whales. We're going to talk about institutional investors in this company. Tipsy topic number four, we are going to do some math. Yes, math. This is a stock channel and we do math here. But we're going to do some valuations to find out what fair value for this company would be, given some of the information that is provided in the investor presentation. And then we are going to close out the series with the We Are Investing wind down, where I go over my personal opinion on this stock, if I hold any shares, and what I plan to do with this company moving forward. Now, before we proceed with the first pitch, I have to say that I am not a professional advisor, so you guys have to do your own research and due diligence before you invest or trade in any given stock. And this video is for entertainment purposes only, but it is quite entertaining. So Utz went on Mad Money to talk about why they are going through a SPAC to get into the public markets and not going through the traditional IPO. Now, SPAC is a special purpose acquisition company. This process is much quicker to enter the markets than your traditional IPO, and they seem to be a very popular way to enter the markets today. Now, I don't really look into it too much as to why this company would go through a SPAC rather than an IPO, but they talked about it. What I really want to talk about are the few words that Jim Cramer said about CCH. I really wish he would have talked about this stock more personally, but he did say some things that, had the Jim Cramer effect. After this episode, the stock went up a decent amount, but it did not hold those gains, which was quite disappointing. But hopefully the next catalyst, when this stock transitions over from CCH to UTZ, we will hold those gains and we will continue to grow over time. But anyways, Jim Cramer said the following.
It's a brand that I know. I'm from Philly. I grew up on this. And my first question to ask Dylan, because you've been the CEO, is why not go public in an IPO? Because people want this company.
Yep, that is all Jim Cramer said, but he said it time and time again, right? And that increased the share price by a decent amount. If Utz is able to get back on Mad Money, we could see a similar bump yet again. Next up, let's talk about Q2 earnings for Utz, which were quite impressive. Now in quarter two, net sales increased 11%. In quarter two of 2019, net sales were 218 million. And in quarter two of 2020, they were 242 million. That corresponds to an estimated year-over-year growth of 11% in net sales. 11% might not sound like a lot when you compare it to some of these fancy growth stocks. But for a company as well established as Utz is in their industry, which is the salty snack sector, that is definitely good growth, and they're beating the competitors in growth in that sector. Now, their pro forma EBITDA was also impressive in growth. The pro forma adjusted EBITDA grew 15% in this quarter and is expected to grow 24% year over year. Now, if you don't know what EBITDA is, it's just your earnings before your interest, taxes, depreciation, and amortization. So in theory, it's basically how much this company makes before they pay all their taxes, all their interests, and all of those good things. So it's not your net income, it's your net income before all your payments. But anyways, those are good growth rates for the quarter, and it's definitely good growth rates for the year. They are definitely seeing an uptick in business because these returns are more than expected. So because of this whole pandemic and with people staying at home, they are buying more of these salty snacks, and that is helping us as a company. Now, in regards to the next shareholders meeting, that is going to be held on Thursday, August 27th at 9 a.m. And in this meeting, they are going to discuss the merger. So if you're invested in this company or you want to invest in them, definitely look to see what happens from this meeting. But in my personal opinion, I think this deal is pretty much done. All that needs to happen is the shareholders need to vote. They need to approve it, which I think is going to happen. I'm pretty sure it's going to happen. And then they'll set a merger date and they'll move forward with the reverse merger. And then CCH will convert to UTZ. And hopefully that provides a catalyst, which will then increase the share price of this company. Now, time for the next tipsy topic, which is about those whales, my dude. So over the last couple weeks, we had a lot of 13F filings, which show insight on what these whales are investing in, where the smart money is. If you're an institutional investor, you have a very large portfolio. When these 13Fs are filed, you can see what positions they're holding, how much of each company they're holding, what they bought, and what they sold. And in quarter three of 2020, the whales were active. We had $102 million come into CCH, and they only sold $4.37 million. That brings the institutional ownership percentage up to 57.52%. And that is definitely a very high percentage for a SPAC. It is the highest of them all, meaning that smart money is backing CCH, which is a good thing if you ask me. Now, of the institutional investors, the two largest is Bamco Incorporated NY, which invested $58.91 million in Utz. And then we also have Goldman Sachs at $25.33 million. That is a very large investment for both of those firms, and it's good to see that smart money is backing Utz yet again. All right, so the next tipsy topic, we got to talk about valuation for this company. We're going to do some math here, and we're going to try to calculate what fair value for Utz would be. So to do this, we're just going to use multiples, and we're going to compare them to similar companies in the stock market. And we're just going to pull these companies from the investor presentation. So we're going to include Pepsi, Campbell, Kellogg's, and General Mills. Now, these companies aren't exactly the same, but if Utz is going to use them in the investor presentation to compare against, then I think it's okay for us to use them here. Now, some assumptions that we need to make. We're going to assume that the shares outstanding is 115.1 million. We're going to assume that fiscal year 2020 revenue is 932 million. And we're going to assume that the fiscal year 2020 EBITDA is 124 million. Now, all of these values are being pulled from the investor presentation, and the shares outstanding was confirmed in their most recent SEC filing. But this could change, and I definitely want to see what the final shares outstanding is after the merger. Now, when you look at the pro forma valuation on the investor presentation, I have one issue with the valuation, and that is the share price for Collier Creek Holdings. The illustrative share price, the theoretical share price, the value that they're using to come up with these estimates is $10. And right now, the stock is trading at around $13.80, which means that their valuation is low. So we are going to adjust this to current share price values of $13.80. So that's going to give us an assumed enterprise value, which is market cap plus debt. So the market cap is going to be $13.80 a share times 115.1 million shares plus $409 million in debt. That debt value was included in the investor presentation. So that gives us an enterprise value of around $2 billion, and the EBITDA, which is 124 for fiscal year 2020, will give us a 2020 EV over EBITDA of 16.1. So that right there is our first multiple, our EV over EBITDA multiple. Next up, we are going to include the price to sales multiple. Now, price to sales is just market cap over annual revenue. So market cap is just share price times shares outstanding. So market cap for this company is 13.8 a share times 115.1 million. So we have a market cap of 1.59 billion. Now the sales, the annual revenue is assumed to be 932 million. So that gives us a price to sales ratio of 1.7. And that is forward looking because that is the end of 2020. So what I did is I pulled the price to sales ratio and the EV over EBITDA for all of those companies looking forward from Seeking Alpha, and then I provided them in this chart. And what you can see right now at current values, in the light blue you have EV over EBITDA, which Utz is lower than PepsiCo, but greater than Campbell's, Kellogg's, and General Mills. And then in the price to sales multiple, Utz is lower than every single one of them. So they have the lowest price to sales multiple. So what does that mean? Well, that is why I like to use multiple multiples, because I want to see how this company compares to similar companies in the market today. But I also took it one step further. I subtracted Utz from the equation, and I took the average EV over EBITDA and price to sale ratios, and then I try to see what a fair value for Utz would be. Now for Utz to match the average of those companies, EV over EBITDA of 14.7, the fair value for this company would be $12.28. Now for them to match the price to sales average of 2.2, the fair value would be $17.81. The average between $17.81 and $12.28 is $15.05. So what does that mean for this company? Well, it means that this company is slightly undervalued in my personal opinion, and I think that the share price could go up to around $15 if it just stays true to valuations. Now, there's something that we need to consider is that valuations don't always hold, and they could be a good indicator that a company is undervalued or overvalued. But as we can see with many stocks in the market, valuations just don't mean anything. Take a look at Tesla. If you look at Tesla's valuations compared to the market, they are severely overvalued. So there's always a potential that a stock goes much higher than the valuation. Now that could happen or it couldn't happen for Utz. I don't know what the case is going to be, but I definitely do like this company long term. I think that they have good growth, and I think that they are going to continue to grow the business at great rates. And over time, that is going to change the valuation. And if we were to do an intrinsic value of this company and take the projected values for the next 5 years and do all of the math behind that, see the debt to equity ratios and do all of that fancy math, we would get a different value for this company. But unfortunately, I don't have that information available to me because they are not a public traded company. They have not filed a 10K. So I cannot look at all that financial information, and it hasn't been audited. So even if they were to provide it, I don't know how true it would be. I look at the future and all I see are pending catalysts that can drive this share price up. The two main catalysts that I see is one, the merger, when this company changes over from CCH to Utz. The second being institutional money continuing to invest in this stock. I am very interested to see if Warren Buffett will buy Utz, because he has been on record before saying that he wanted to buy the company entirely. And once this company becomes publicly traded, I will be very interested to see if he buys shares, and that would increase the share price in my personal opinion. I also think that Utz could get back onto Mad Money and have the Jim Cramer effect, which would also pump up the stock. I also think that since I am talking about this stock, the stock is going to go up because I got you guys to support this stock. Nah, just kidding. I don't really think that's going to happen. And like I said, I don't want you guys to invest just because I like a company or not. I want you to like the company too, and I want you to do your own research. So I am an investor in CCH. This is a company that I think you can hold in your portfolio long term, and it's a company that I like. So with that being said, let's hope for the best and let's wrap up this video. If you like this video and the content that I am providing, please consider hitting that subscribe button and smashing that like button. Otherwise, it's been real, it's been fun, it's been real fun, and this is We Are Investing, and together we are invincible. See ya!